Understanding deflation, in its simplest form, is a sustained decrease in the general price level of goods and services. Imagine walking into a shop and finding that the prices of your favorite items are consistently dropping over time. While this might seem appealing at first glance, deflation can be a harbinger of deeper economic woes. When prices fall consistently, consumers and businesses alike tend to delay purchases, anticipating even lower prices in the future. This delay further dampens demand, leading to a vicious cycle. Businesses, faced with shrinking demand, are forced to cut production and lay off workers, which in turn exacerbates the problem by reducing consumer spending power. Deflation can be particularly pernicious for economies grappling with high debt burdens. As prices fall, the real value of debt rises, making it more difficult for borrowers to repay. This can trigger a cascade of defaults, potentially undermining financial stability. While moderate inflation is generally considered healthy for a growing economy, deflation can be a sign of deeper structural imbalances and can have far-reaching consequences. For a global economic powerhouse like China, grappling with deflation presents a unique set of challenges with significant implications for both its domestic economy and the world at large. China, the world's second-largest economy, is currently facing a deflationary dilemma. For 6 consecutive quarters, the country has witnessed a persistent decline in prices, a trend that is projected to continue for the next 2 years, according to GIS reports. This deflation is not merely a statistical anomaly but reflects a deeper malaise within the Chinese economy. Consumer prices have been on a downward trajectory, with the Consumer Price Index averaging a meager 0.9% in 2024, significantly undershooting the government's target of around 3%, as reported by Reuters. The Producer Price Index, which measures the prices of goods at the wholesale level, paints an even grimmer picture. December 2024 saw a 2.3% year-on-year decline in PPI, marking the 12th consecutive month of decline, according to Reuters. This persistent decline in both consumer and producer prices is a red flag, signaling a weakening of demand in the Chinese economy. The once voracious Chinese consumer, a key driver of global growth, appears to be tightening their purse strings, setting off alarm bells for businesses and policymakers alike. To understand China's deflationary spiral, one must delve into the complex interplay of factors beneath its economic miracle. The Chinese economy's rapid growth has masked deep-seated structural issues. A pressing challenge is the widening income gap. 65% live below the middle-income threshold, earning less than $412 per month. This disparity dampens consumer spending. The real estate slump, accounting for 20% of GDP, adds to the woes. Falling property prices erode middle-class wealth, further dampening sentiment. Traditional growth engines like infrastructure investment, contributing 24% to GDP, have lost steam. Heavy investment has led to overcapacity and local governments struggle with high debt. Section 4. Beijing's Balancing Act, Navigating the Deflationary Maze. The Chinese government is trying to stimulate the economy without increasing its debt burden. Aggressive monetary easing and fiscal stimulus are being replaced by a cautious approach. Measures to boost consumer spending and stabilize the economy have been unveiled. Plans include increasing the fiscal deficit ratio, issuing more treasury bonds, and reducing interest rates. The People's Bank of China has embarked on an interest rate-cutting spree in 2024. However, these measures have yet to significantly revive consumer spending. Addressing structural issues like overcapacity and high debt is crucial for sustainable growth. President Xi Jinping envisions shifting towards an innovation-driven economy. This transition faces challenges, including pushback from Western countries. Section 5. Ripples Beyond the Wall. Global Echoes of China's Deflation. China's economic woes are not confined within its borders. They are sending ripples across the global economy. As the world's second-largest economy and a major importer of raw materials and consumer goods, China's slowdown has significant implications for global trade. The shrinking demand in China has led to a decline in imports, impacting countries that rely heavily on exports to China for their economic growth, as noted by Carnegie. Furthermore, the deflationary pressures in China are contributing to lower global commodity prices, impacting commodity exporters worldwide, according to Reuters. The deflation in China also exacerbates trade imbalances with its trading partners, particularly the United States. As Chinese goods become cheaper due to deflation, it puts pressure on manufacturers in other countries to lower their prices, potentially leading to job losses and economic distress. Section 6. Charting the course ahead, a glimpse into China's economic future. Looking ahead, China's economic future remains uncertain. While the country is not expected to experience a full-blown economic collapse as per GIS reports, deflation is projected to persist in 2025, fueled by weak domestic demand and rising unemployment, according to GIS reports. The Chinese government faces the daunting task of navigating these challenges while managing its growing debt burden and geopolitical tensions. Some economists have cast doubt on the accuracy of official economic data, suggesting that GDP growth might be overestimated, as reported by GIS reports. Policy recommendations from institutions like Carnegie suggest focusing on two key areas: decreasing the demand for money by lowering essential living costs for middle and low-income workers, and increasing the money supply through expansionary monetary and fiscal policies. These policies could include targeted measures such as tax breaks for wage increases, lower personal income taxes, and expanded tax credits and deductions for families. Section 7. Conclusion. Deflation. A challenge for China and the world. China's deflation dilemma is a stark reminder that even the most dynamic economies are not immune to the forces of economic cycles and structural imbalances. The country's efforts to navigate this deflationary period will have profound implications, not only for its own citizens, but also for the global economy. As China grapples with these challenges, the world watches with bated breath, hoping for a soft landing that avoids a global economic downturn. The stakes are high and the outcome remains uncertain, but one thing is clear: China's deflation dilemma is a defining economic challenge of our times.